Hello and welcome to Switzer Investing TV. I'm Peter Switzer and thanks for joining us. On tonight's show, I've got Adam Dawes of Shaw and Partners, and I'm asking him about 3 or 4 companies that his business, stockbroking business, really rates very highly. The percentage gain predicted is really big. So I want to know what's the thinking behind the analyst that works in Shaw and Partners, why they like this company so much. And then Paul Rickard and I are looking at a sector that's currently been beaten up because of 13 interest rate rises, namely the retail sector. And I asked the question, well, is it time for us to buy? Sure, you're not going to make money in, say, 6 months' time, but my thinking is when interest rate cuts come, that's when people will start saying, oh, hang on, the economy is going to start to improve and retailers are going to do a lot better business. We better buy now. And one day before the budget, we're hearing that the Treasurer is talking about lower inflation because of the budget, and that could be good for interest rate cuts. So it's the right time to start thinking about retail stocks like JB Hi-Fi, Harvey Norman, and so on. That's the show. Let's kick off now with Adam Dawes of Shaw and Partners. Well, joining me now is Adam Dawes of Shaw and Partners, and I want to ask him about a number of stocks that I've been asked about on our Boom, Doom, Zoom webinar, and many of them are liked by Shaw and Partners. And because Adam Dawes works for Shaw and Partners, he's probably the right person to talk to. Adam, thanks for joining us.
Great to be here, Peter. Absolutely.
I thought just in case people can't read, it's probably worthwhile me making the point that you work for Shaw and Partners.
Yeah,
You can't get a greater emphasis on who you work for.
that's right.
All right, mate. Let's go to the reasons why I want to talk to you today is that when I've been asked a number of questions, I have seen that Shaw and Partners analysts. I know you don't do all the work there. There are other people who work at Shaw and Partners, but it'd be interesting to see what the view is. And some of these stocks, like for example, I own Chalice. I bought it at low prices and I kept my fingers crossed that one day it'll rebound. What's the thinking behind Chalice, mate? 75% upside, by the way. That's what the guess is.
Yeah, like it's interesting, isn't it, that some of these and if we had a chart, we could sort of show you sort of a 10-year period of that chart. And I think a lot to do the reason why, and it sort of rallied higher and then it sort of drew sideways and then it's sort of dropped off and now it's sort of lower. In a company that's in exploration phase, it has a very different shareholder base to those that are in production. And the hot money is in the exploration side of things. That's where all the hot money goes. And that's why, you've seen this meteoric rise of it going forward. And then as they're drilling, as they're finding more gold or palladium, as in for this case, the numbers are coming through and everybody's liking it. It's sort of moving around. There's lots of volatility. But then the company then moves into a production phase where it's all about how much is in the ground, how much is it going to cost to get out of the ground, and can we make money?
Yeah.
And with that, you've got to then overlay the spot price of gold, spot price of palladium, spot price of anything that the commodity that they're digging out of the ground. And if some of those spot prices aren't doing so well, then the share price will follow that spot price because they're going to produce one day and they're going to have that. So I think with Chalice is you've got this original excitement about the exploration and lots of hot money comes in and then it sort of drifts down and then they turn around and say, okay, we're going to move into production and this is what we've got to do. So there's been I guess a development or a strategy reset, especially with Chalice, and that reset is when one of their bigger mines, which is the Gonaville deposit, they're looking to evaluate now to do more of smaller scale operations than more of a larger scale operation, a smaller scale. And I think that will obviously reduce construction costs, capital and funding, but it does mean that the share price is potentially going to stay weaker for longer because resources is all about bulk commodities and lots of it moving through. So I think that's one of the reasons why you had a change of shareholder database or change of shareholder base. You've then got the issue of that they're sort of redeveloping the strategy going forward. Now, the commodity prices have started to move now. We haven't started to see Chalice start to move with that commodity price. The commodity prices are starting to move higher. Certainly gold, palladium, those kinds of things that they do have. Palladium, platinum, gold, nickel, copper, and cobalt. It's all in there. So copper's obviously started to rally really well. Palladium probably hasn't rallied as much. So there's a couple of things why this stock isn't moving, and I think that sort of answers some of the questions. But it does look like there's some good up-and-coming catalysts that will start to move this stock going forward. Obviously, completion of a scoping study. I think that's really important. That scoping study's got to do. And then pre-feasibility study, which is looking to be done around mid-2025. So we're in a bit of a hold and wait pattern at the moment until that completion of that feasibility study, and then ongoing drilling where they're going to sort of prove this thing out a little bit further to get a JORC resource. So it's sort of in this sort of limbo where you don't have the hot money in there. The hot money's left. They found something else. And then you've got these, regular investors that are sort of sitting in there sort of thinking, okay, what are we going to do? How are we going to make this? And so that's when the real rubber has to hit the road, and management need to really confirm and keep the market happy that these things are moving forward. So there's lots to that. Sorry, Pete, I sort of rambled on a little bit.
It's a really explanation. In fact, it's been one of your better explanations from all the time I've ever known you. So well done, you.
I've worked hard on that one.
I think that the next question then is, given the fact that your analysts see the 75% upside, what they're saying is down the track, they think this company will materialize the benefits of the products they've got. They go to market, they become a profitable company, and that rating means that they believe in the future story of Chalice. We don't know how long it's going to take, I guess the bottom line is.
Yeah, bottom line is we don't, there's that feasibility or scoping study by mid-2025 is really going to be that sort of the line in the sand that needs to be drawn to be able to say, okay, this is how much it's going to cost us to get it out of the ground. We've got offtake agreements, or we've got people that we can sell it to, and now let's start producing that. So yeah, it's a bit of hold and wait on that one at the moment.
And I guess from my macro view, that if China keeps on recovering and becomes a strong grower in 2025, a lot of mining stocks will be beneficiaries, even though they might not materialize the kind of potential success that they're going to have one day down the track. If China starts buying, these guys' share prices will move.
Yeah, absolutely. Which means the commodity price will move and everything moves, sort of rising tide lifts all boats. So yeah, absolutely.
Gee, I wish I'd heard that one before. That's a beauty. So, okay. All right, let's go to CXL. Sorry, I made it too long.
No, look, hey, you're right. You're right. I'll think of another analogy. I'll think of something else.
Yeah, me too. I'll try to think of another one as well. All right, but I'll tell you what, it was a goodie when it was first pulled out.
50 years ago.
Calyx. 256% upside. And I know these ones really worry you but the bottom line is, someone must think this company's got a lot of future. What is the story of its future?
Look, I've got a lot of clients in this one at a lot higher prices, and I'm not concerned.
Yeah.
Okay. The share price is where it is, and you can't hide from it. It is a lot lower, and it has a huge amount of upside if we can get there. But I think that there's a couple of things with Calyx is that the market has moved away from a green investment stance. I think we've sort of moved on a little bit from that, and Calyx was a beneficiary because it is a very environmentally good stock.
Yeah, it sounds like a company that it said there's so much potential out for environmental products and processes. Let's just go full on, and the market will love them.
Yeah. And look, I still think that the market will love it, because what we've got is you've got all these test pilot plants that are out there at the moment, like PLS, Pilbara Minerals has got one there. They've got a couple in Europe. They've got a couple of these other ones where these test pilot plants are running. Now, one of the big test pilot plants is taking heat out of cement manufacturing. Okay.
Oh,
Now,
huge.
that's an environmental issue when there's a lot of cement around the world. I mean, the whole world's wrapped up in cement these days. But to produce it is quite environmentally bad, not
Yeah,
great.
it's a big footprint, big carbon footprint. Yeah.
Right. Yep. That's the right one I was looking for. So Calix has got this this technology, and it's basically it takes the heat out of the cement stacks that are the kilns that create the cement, and these pilot plants are working, and they've in fact got royalties that are continuing on even to this day in perpetuity. Okay, so these royalties will continue forever.
Yeah.
On these either cement plants, or they just did a deal with Microsoft as well to sort of take out some heat from some of their data centers and things like that. So these kinds of things are in infancy stage, and the technology still needs to be proved. But it just those ongoing royalties will continue. So I'm not worried about the business. I'm worried the market doesn't understand what they do and trying to work out how they can actually, generate the revenue. They've got revenue coming in, but it's probably not enough. And again, if we looked at that chart, it's had a great run up, went over, and now back down to where it was 8 years ago, 5 years ago. And only sort of it's now starting to get a little bit of love from a couple of sort of other brokers that are starting to look at it. And there's a little bit of buying coming into this one. So yes, there's lots of upside to it. Those deals that they're getting are going to be in perpetuity. So that royalties that are coming through, it just needs the market to get behind that green tinge that we had a year and a half ago, and the market will get behind this and keep moving it. So it's fallen out a little bit of love at the moment.
It's interesting, mate, because like lithium is in the same sort of situation. One day, young people will be just driving electric vehicles. It's this transitional period until we get great infrastructure, when an EV can drive 800 k's without having to be charged. All those sorts of things are going to be great. So it's just like you're waiting for this the green world to come about, and it probably won't be until 2030. But along the way, the market will get in advance of it.
And it's a great time to be looking into buying these things as well. There's, it's sort of unloved. Nobody's looking at it. They're the kind of times that you can start getting set while there's lots of stock around before it starts to, shoot and continue to go higher. So yeah, it's a tough one at the moment.
Yeah. Another company, which I often bring up, only because I've lost money on this one, but I guess I wouldn't stick with it unless the fact that I know that Potentia Capital offered Tyro $1.60 a share, and the board said, nah, this is an opportunistic offer. The board believes in the company, and you guys have a 75% upside call on Tyro. What's the latest thinking on Tyro?
I think the latest thinking is that the consumer is probably not as resilient as what we've been thinking.
Good point. Yeah.
And, you saw that with Bapcor. You saw that with JB Hi-Fi's numbers, albeit JB Hi-Fi numbers were pretty good. You could just get the feeling that the consumer isn't as resilient. And I think that's what sort of flows through to Tyro, is that obviously every time you tap, they're taking a clip of it, but every time you tap, you're spending more money. And I think the whole idea of Tyro, which is the middle person between the bank and the machine or the tapping machine, that they should be able to clip the ticket and everything should be okay. Tyro's had to change its business model a little bit. It's more of a hardware seller than a sort of a sort of tech business as such. And I think, the directors will be licking their wounds because they did say no to that offer. And maybe it was opportunistic, but the market was pretty hot in that space and the consumer was a lot stronger back then.
Yeah.
So I think it's just an evidence of how the consumer is struggling, and we're starting to see that coming through in the numbers. And now the good companies will continue to stay afloat, and the good companies will continue to grow. It's those smaller companies that might just need a little bit of love. And I think Tyro is quite a big company. Like it's not like it's
Number
a minnow.
5 in the FPOS space. Number 5. So the big 4 banks are bigger, but
Yeah.
it's number 5. Yeah.
So I think there's room for it to improve, and certainly I always look at the machines that I'm tapping on, and it's probably Tyro. It's probably 1 out of 4 that I see, 1 out of 5.
Yeah.
So like they're out there. It's just that it just needs a little bit. So your consumer needs to get back in, and I think that's the key. Is once consumer confidence comes, then these things will rally as well.
Yeah, I was commenting to Paul Rickard earlier how one of the bond fund managers was making the point that Australia actually was, it was Angus Coote, as a matter of fact, he was saying that Australia really has been in a recession since 2023, but 737,000 immigrants came in a sense that kept the economy looking stronger, but that entrenched part of the economy where Tyro would operate in hotels and restaurants and all that sort of stuff. Well, all restaurateurs know things have got slower, and the consequence, there's a knock-on effect. And I guess the flip side will be when interest rates start coming down and we start predicting a stronger Australian economy, well, then a company like Tyro would be a beneficiary. The problem for us is it's taken longer for it to rebound than we expected, but hell, 13 interest rate rises will do that.
It was certainly will, and definitely knocked the sales out of all of that as well. So, yeah, I mean, we've got CPI in the US coming out on Wednesday, our time, 10 o'clock Wednesday night. It's going to have a flow-on effect to what we do here in Australia. The American consumer is the biggest consumer in the world, and they're really starting to feel some of that pain. So it's just going to knock-on effect through us all. But it's an interesting story, and again, it just gives you that opportunity to get set in these things when nobody else wants it. How about this analogy, Peter? We want to be the person running towards the fire, not running away from the fire.
Oh, really? Why do I run towards the fire? So it's an interesting analogy. Are you wearing asbestos suits or something?
Fire hat? No, like when everyone else is running.
It sounds like Tony Abbott, as a matter of fact. Tony goes into fires and runs at the fire, but go on.
So no, it's just the idea that everyone else is running scared. We're not scared. We're running towards the danger, not running away from it. And that's the investing 101 is when there's blood on the streets, that's when you should be buying.
Yeah, I think that was Baron somebody in France once said that. Buy on the sound of cannons. Yeah.
There you go. There you go. I like
Baron Rothschild.
Rothschild. Well, he would know.
Go and Google that before you ring a client up. All right, and use that one rather than your a rising tide lifts all boats. Mate, thanks for joining us.
Great to be here. Thank you.
Yeah, that's Adam Dawes of Shaw and Partners. There I. And that's the offering for people who aren't subscribers to the Switzer Report. Coming up after the break, this is Paul Rickard, and we're talking to him about the retail sector. And is it time to be a buyer?